Good day, everybody, and welcome to our short course on counterparty credit risk and the environmental excess of indemnity solution. This is actually one in a series of short courses we're going to be delivering over the coming days. These short courses are designed to be highly focused, very relevant to your business situation, and also intentionally brief, 15 to 20 minutes, so we can get you up to speed with some highly impactful information and then back to your very busy business day. So with that, let's go to the next slide. So what is our agenda? We're going to talk through challenges with environmental indemnities. We'll then talk about the excess of indemnity insurance solution. We'll go into information on underwriting, what's needed to underwrite it. We'll actually make it live and go through an actual sample endorsement. And then we'll talk about applications. Next slide. I'm your presenter today. I'm Jim Vetter. I'm a managing director in the Marsh Environmental Practice. I've been with the company 19 years. I focus on mergers and acquisitions and highly complicated risks. So with that, let's start. So environmental liabilities in transactions, they come up almost all the time across most industries. Traditionally, when environmental liabilities come up, they're dealt with in a couple ways. Buyer and seller are both trying to figure out who's going to take what. And you commonly see things like purchase price adjustments, where we expect a buyer to assume the liabilities in exchange for a reduced price. There may be escrows set up that one or both parties can tap into. And then most commonly, there's always going to be contractual indemnities where liabilities are probably going to be split up between the parties. And each party is going to assume liabilities and indemnify the other. So there'll be an indemnitor, an indemnity, and that will be it. So the question, if we go to the next slide, is this. How do we deal with the risk with them? All the indemnities make sense, at the time, but after that deal's closed, there are risks to indemnity. So number one is, you could end up having an indemnity guaranteed by a company that becomes insolvent in the future. Even if a company is still around, they may be in financial distress and they may decide to delay the performance of that indemnity to you in a method to conserve cash. And suddenly that indemnity or the regulators coming back and looking at you, or there may actually be a dispute over the indemnity, who actually is responsible for it. So again, indemnities are great ways to solve environmental liability solutions, but it's not bulletproof. So the question is, what can be done? Next slide. The good news is there's been a solution that's been around for quite a number of years, and it's called excess of indemnity insurance. So let's talk about what it is. Number one, it's not its own policy. Some people think, there's a specific policy called excess of indemnity. What it is actually it's an endorsement, a specialty endorsement to a pollution legal liability policy. Many of you are used to dealing with PLL. PLL is kind of the workhorse around mergers and acquisitions or managing risk within your business. But you can actually get an endorsement to that PLL to cover this specific risk. So we use the term excess of indemnity as kind of a generic catch-all. Different insurers use different titles for it. So for example, Markel may call it, or does call it, agreement to indemnify. Beasley calls it scheduled contractual obligations. So it all, even though named differently, it all gets the same thing. So what does it cover? It's pretty simple. What it covers is performance failure of the indemnitor related to environmental indemnity obligations for pollution conditions. So if you are the indemnity, you've received an indemnity from an indemnitor, and that indemnitor fails to perform, this insurance is designed to step in. And it can pick up two different buckets of risks. The typical PLL risk, which is unknown pre-existing pollution conditions. So again, if the indemnitor is assuming kind of those unknowns that may develop in the future that were related to the transaction, it will pick up that. Most importantly, it can pick up known pollution conditions. So if the indemnitor has assumed liabilities for known cleanups and that fails, or they fail, and that comes back to you, this solution picks that up. That is really powerful to be able to pick up both unknowns as well as known pollution conditions. Next slide, please. So when we go to underwrite this, there's really three different categories of risks that are looked at. Contractual liabilities, what's the environmental situation, And then what are the financials of the indemnitor? And we'll talk about these in a little bit of more detail right now. So from a contractual standpoint, in the purchase and sale agreement, what risks are being indemnified? Is it just only unknowns? Is it known conditions? Is it other risks? So that's going to be the first thing. What's the scope of the indemnity? Who's the indemnitor? Is there a term to the indemnity? Sometimes they're in perpetuity, most often. Well, sometimes you also see a time cutoff. And there can also be financial limits where that indemnity may be unbounded or there could be caps to it. When we go to the next category, it's environmental. So now it's going to be okay if we're picking up, for example, a number of sites. How many are there? What was the history of them? What are the very specific risks that are coming out of it? Are we picking up, all liabilities? So if they are, you're looking at cleanup, third-party bodily injury, third-party property damage. You may be picking up non-owned disposal sites and maybe even previously divested property. The carriers will look at how much we know about these sites, and if there are known conditions, how well do we understand those? Are they well investigated? Is there a cleanup plan? So it's all the standard stuff that you would look at if you were doing due diligence, which you probably are as a buyer on a target. So the same type of information is going to be of interest to the carriers. The third category of risk is financials of the indemnitor, because this underwriting is two things. It's largely environmental, but it's also financial, because they're backing up whether that person's going to basically be there and fail to perform. So they're going to look at, are they healthy or are they distressed? Do they have are they likely going to go into solvency, based upon what their financials look like? So they'll look at things like, who is the indemnitor? Is it a corporation or a limited liability corporation? Big difference. If it's a corporation, that's really good. You got business income streams. It's an LLC, a little bit more challenging. There's maybe not a business income stream, but you're looking at basically a capitalized entity. So you're going to look at how well it's capitalized to be able to meet those obligations. So things like credit rating come in, again, for an LLC, how well it's funded. Are there other resources? Are there real estate? Is there scrap value if we're doing demo? Are there surety bonds in there? Maybe partial parental guarantees, things like that. All those things are factored into looking at that risk of, will that entity perform around their obligation? Generally speaking, the insurers prefer corporations over LLCs, but LLCs get all done all the time, so long as they're adequately capitalized, and especially if there's a history of the parent who created the LLC has performed well over time with other LLCs that they may have created. Next slide. So how's the insurance marketplace in this space? The good news is there's a limited number of carriers who do this, so not everybody will underwrite it. So maybe the company that's doing your PLL for your operations may not do it, but there's more than a sufficient number to basically manage this risk. That's great news. In terms of what they're able to do, they can lock in for as long as 10 years, which is the max you can get in the industry around pollution legal liability. The limits, we can aggregate easily up to 100 million in limits on individual deals. Most of the deals that we see, these excess of indemnities are usually like 10 to 25, but again, more than enough limit if we need to go higher. From a self-insured retention perspective, it can vary anywhere from 0 to the standard self-insured retentions that you see of 100K per pollution condition or more. There's also a sub-component of it where they also want to see a certain amount of legal costs spent to try to compel performance. So usually they're looking at you to spend around $25,000 to either prove that an entity is insolvent or attempt to get a non-performing entity to perform. And if you spend the 25 G's and they're still not performing, then it's time, then you're able to file a claim. Next slide, please. So let's actually bring this alive and review a sample endorsement. So we're going to go to an example of what Markel uses as their specimen policy. First thing you're going to notice here, this is really simplistic. So again, it's not like an entire policy that you've got to read 10, 15, 20 pages. A simple 1.5 page endorsement. So as you can see here, we have over on the left-hand side, the agreement to indemnify. We simply schedule who the indemnitor is, the purchase and sale agreement, what the retention is, and what the limit of insurance is. And then very simply, if we look at the insuring agreement and read it, it's pretty clear. We will indemnify you, so you're the insured, up to the limit of insurance for damages and defense costs for bodily injury, property damage, and cleanup costs. So again, defense and all the basics, which arise out of the agreement in the schedule, if these costs are incurred during the policy period, and when the indemnitor fails to perform. That is really simple, straightforward language. And if we go to the right-hand side, just some basic requirements around notification, transfer of rights. Again, if this thing triggers, they may want to try to go back and see if they can recover, but they're going to pay you first and they'll come back. And then basically just simple things around, hey, we're going to assume everybody's complying with the indemnity agreement around just basics, and also that there's no modifications that are made to it after the underwriting. So again, a very simple, easy endorsement to manage counterparty credit risk. Next slide, please. So the applications, this can come up in a large number of situations. So the classic opportunity is in mergers and acquisitions. We're doing a transaction. Indemnities may flow one way. They may actually flow both ways. So each party may say, you know what, I want to have a backstop in case the indemnitor in the transaction, again, insolvent, fails to perform. So that's the most common. You can see it in corporate spinouts and bankruptcy. You see it in property transfers quite a bit. So if we're doing brownfield redevelopment and somebody's, buying a site and then indemnifying the seller, you'll see that a lot. A big thing in our industry is environmental liability buyouts, where we have specialty companies come in and literally assume environmental risk from corporations. But when they assume that risk, it's basically a merger acquisition of liability in exchange for the cash. So the same concern occurs, which is, hey, what happens if there's a failure to perform? Well, what do? Excess of indemnity. And basically any other circumstance that may arise where there is an indemnity involving environmental liability. So again, broad applications, a lot of circumstances. Next slide. So with that, we're at the end of our program. If you should have any questions or needs, please feel free to reach out to me, give me a call. If not, do realize we do have other programs and short courses coming up. Those programs will be covering a number of different topics, including asbestos liability, cost cap insurance, and the M&A toolbox. So again, thank you for joining us. Hopefully this was very informative and helpful, and have a great day.